Good evening and welcome to the earnings review, your tidbits into company financials and operational insights. Thank you for joining us as we broadcast from our Hampton studios in Harare, Zimbabwe. I'm Ibn Mabunda, yo money man. On the show, we profile companies that are movers of the Zimbabwean economy. We also give you comprehensive market analysis. Tonight, we focus on CBZ Holdings, a ZSE-listed blue chip. Now, let's get into some details with regards to the firm's operations. CBZ Holdings has CBZ Bank Limited as one of its flagship units. Now, CBZ Bank Limited was founded in 1980. It was taken over by the government of Zimbabwe in 1991 to avert a looming liquidation and was renamed the Commercial Bank of Zimbabwe Limited. 1998, the firm was listed on the Zimbabwe Stock Exchange. 2005, the company rebranded, creating CBZ Bank as the main business and CBZ Holdings as the holding company. The firm has since expanded over the years and is now spread across different segments of the financial services sector. It owns subsidiaries in banking, insurance, investments, wealth management, mortgages, as well as retail finance. Its main units include the CBZ Capital, CBZ Insurance, CBZ Life, CBZ Bank Limited. Some vital stats: with a current share price of 8,400 cents, the firm has a market cap of just below 58 billion Zimbabwean dollars. The stock has slipped 1.2% in 2021 vis-a-vis a financials index that is up over 60% in this very year. The ZSE has surged over 132% in 2021. Now, in just a moment, we'll get into an earlier conversation that we had with an Equity Access Chief Analyst, Respect Kwenzi. Don't go anywhere.
Equity Live presents the complete online interactive presentation solution. Hosting AGMs, media and analyst briefings has never been this simple, efficient and affordable. Communicate globally through a combination of high-definition video and your prepared multimedia presentation from any location of your choice. Interact with your invited participants from all over the world in question and answer sessions and voting sessions in real time on our safe, secure and affordable platform. Contact Equity Live for a free customized demonstration. Equity Live, real-time presentation solutions.
Now, joining us for a conversation of the performance as well as overall outturn for CBZ Holdings is the Equity Access Chief Analyst, Respect Kwenzi. Respect, good day and thank you for joining us on the earnings review.
Thank you, Ibn. As always, it's my pleasure.
Fantastic. Well, this conversation is coming in shortly after the release of the results for the group for how they fared over the 2020 financial year, as well as also a release of the first quarterly outturn for their first quarter of 2021. But perhaps before we get into the nitty-gritties of the figures as well as the performances, can you give us the backdrop on which we're having this conversation, some of the key indicators taking place within the banking sector, or should I say the financial services sector at large, before we narrow it down to CBZ Holdings?
Thank you, Ibn. I think it's really important for us to touch on those key aspects because they have a ripple effect in terms of how business performance is within our environment. So 2020 was really a challenging year, not only for Zimbabwe but the globe at large. The pandemic hit the world early into the year, and this meant a whole lot of variables had to also change with it. We saw digitization taking a center stage, and it meant that companies which were more invested in their digital platforms benefited, and those that speeded up their response also reaped something out of the exercise. But the macro environment really became more challenging, especially in the late into the first half of the year. Why? Because Zimbabwe specifically faced a challenge to do with the exchange rate. We saw in that first half period, the exchange market, which is the interbank market, was not as functional. Why? Because if you look at the rates that were prevailing between the interbank and the parallel market, they were quite some variance, and there were low flows on that respective market. If my mind serves me well, the average that was traded per session in those respective periods was about 2 million a day, and presently we're seeing volumes of upwards of 6 million per session. So that really shows you that there's been a fundamental shift. So in 2020, we saw a challenging macro environment, which was characterized with hyperinflation. It was also characterized with exchange rate depreciation, the infections around the pandemic, which led to serious lockdowns. Companies scaled back in terms of production. And I think, these factors really militated to weigh on the overall performance of the economy and companies operating within the Zimbabwe environment. And CBZ really was not spared as a financial services company. The first challenge around hyperinflation, this meant that disposable incomes shrank, and therefore consumers or their customers' ability to continue transacting was impacted. So you would see a first half where transactional volumes really came off, and the bank's ability to churn out loans was quite impacted as well. But yes, we would see from the results that there has been now a growth in terms of the amounts that the bank has been loaning out. But for the overall sector, there has been a cautious approach into lending, which resulted in slower growth or lower incomes that are coming from the core interest income line. But when you look at non-interest income lines, you would realize that there is a whole lot that's happening there. The foreign currency impact, some companies continued to gain in terms of the foreign currency depreciation. Those that had hedged or those that had books with USD balances realized those unrealized profits from foreign currency holdings, and CBZ also benefited from that. So really, this is the kind of macroeconomic background that I would give. Safe to say, for the banking sector as well, the issue around the pricing of credit, the issue around the pricing of non-credit products, which is at the mercy of the RBZ. Adjusting your costs or adjusting the cost that you charge in terms of transactions that are done within a banking service operation. I think this was also one of the biggest challenges, because banks were slow to adjust this aggregate, and hence the lower contribution of fee and commission income on banks, profit and loss accounts.
Now, to zero in terms of how the organization actually fared in 2020, my mistake. The group, of course, posted an increase of 262% in inflation-adjusted terms, coming in at 5.1 billion Zimbabwean dollars against the comparative performance in the 2019 financial year. And some of the key indicators therein was the net interest, which scaled 115% to 3.7 billion Zimbabwean dollars against a prior performance of 1.7 billion Zimbabwean dollars, while the group total income was $14.6 billion, up 20% from $12.2 billion recorded in the comparative period of 2019. Just in a nutshell, what has been the steering factor of this particular performance?
Yeah, so if you break down the kind of income that the bank generated in 2020, you would see that there is a growth which is coming from interest income. But when you zero in on that number as well, you realize that the biggest contribution is coming from overdraft facilities. So what is an overdraft facility? This is a facility that banks allow, especially their corporate customers, to utilize. And this is basically a corporate, requesting funds from a bank beyond its existing balance. And this really is a culmination of companies beginning to realize, production recoveries into the second half of the year, and the need to utilize such a facility. So overdrafts are one of the biggest drivers of the interest income line. But also there is the loans, loans extended to customers. This line also grew but it didn't grow to the extent that overdrafts grew. So you would find a growth in interest income emanating from these two lines. Historically, CBZ used to generate a significant portion of its interest income from, government-related businesses. We would name, treasury bills, etc. Yes, they continue to be that close relationship between government and CBZ, but in terms of the interest income line, I think investors are more at peace, realizing that the bank is tapping in to non-government related business. Not to say that government is not a player in that space, or it's not a credible player who could pay back the loans, but the issues around TBs and the risks that were there, especially before 2019. So I think it's a good dynamic to see the interest income line changing direction and now earning most of its income from loan-related business. When you look at non-interest income, you would realize that there are quite a number of components there. One of it is profit from unrealized profit from FX holdings. So the bank held foreign currency, which obviously firmed when you then look at it in Zim dollar terms at the end of the year, because of the depreciation of the local currency. So those unrealized gains on forex holdings contributed significantly to the bank's income. But one biggest contributor there is the emergence of agro-related business. So CBZ has become big in terms of agro financing and other, agro-related business. Due to proximity with government as well, you would find that the bank is positioned to play a bigger role in terms of resuscitating the agricultural sector in Zimbabwe. So with a good 2020-2021 season, definitely the bank also ripped into that, and they earned a biggest fraction of their income from this agro-related business. So it's an emerging line and it's showing potential, but it remains to be seen the split or the breakdown of the income that the bank generated from that agro-related business. But also, one of the conventional lines there would be fee and commission income. It grew, but it didn't grow by, as high a margin. This speaks to the aspects of low volumes, transactional volumes in the first half of the year, and also the low charges, bank charges, before RBZ, adjusted those costs. And so there was low transactional volumes emanating from, a COVID-19 situation, low disposable incomes, and this really weighed on the prospects of fee and commission income line. One of the other lines there would be money generated from the insurance side, which is basically one of the key units there. It also grew, but by not so much a big margin. So this is basically how this income played out for CBZ in 2020 financial year.
Now, just as follow-up to that particular question, Respect, can you speak to us with regards to the investment of the group where agriculture is concerned, as well as the credit facilities that have been extended to that particular sector? Of course, 2021, the agricultural season is proving to be somewhat of a positive, given the heavy amount of rainfall that we received over the period in question. How reliable would be the bank's investment in that particular sector, given the unreliable weather patterns or climatic conditions that have been prevailing over Southern Africa over the past 5 years or so?
Yeah, thanks, Eben. I think that's a key point that you have noted there, to just say, if you are, generating a significant portion of your income in a sector which is quite prone to these uncertainties and volatilities, what does it mean for the ability of the organization to continue generating such kind of business going forward. So I think that's a key point. But then, if you look at agriculture in the setup of Zimbabwe, it is one of the biggest sectors there, both in terms of contribution to GDP and also, employment, etc. Despite years of decimation, that sector remains with huge potential. And so it's unavoidable that the bank has to play in that space, given that it is also one of the biggest institutions in the country, and also that government is invested in the banking institution, and the broader banking, the financial services group. So it's inevitable that they should play. But yes, there are these volatilities, there are these uncertainties that come with the agricultural sector. But most of this is funding that is also that is also guaranteed by government. If you recall, earlier in the year to late last year thereabout, there has been information around how government and some banks, including CBZ, have been trying to channel funding for the sector, for the agricultural sector, but with a guarantee that funding would be expressed by banks, but with a guarantee from the government. So I think this speaks to a continual or gradual undertaking to try to resuscitate the sector, and also to cushion banks against the likelihood of defaults and so forth. So I think it's imperative that they should play in that sector so as to revive the economy. But equally, it's important to look at the risks associated with it, and it's important to move cautiously. But for now, I would say if the guarantee clause is kicking in, then there would be minimal downside risk for the bank to participate in that sector.
Now, let's talk about the buildings business of CBZ Holdings. Several years back, we saw the merger of the then CBZ Building Society with the group, and it remains an essential aspect of the operations of the group. Now, given the fact that we have seen a lot of economic turbulence on the local scenes with a mortgage market that's nearly decimated, if you recall from our previous conversations with the executive respect, there have been a lot of discussion around pricing with regards to some of the properties that the group has actually completed. And then as well with that, speaking of turbulence, remember there was also a deal on the table where CBZ was involved for the erection of a new hotel here in Zimbabwe. I think it was it the Hilton or the Radisson Blu about 2 years back. Have you perhaps heard any indication as to whether there has been any progress where that particular development is concerned?
Yeah, so the bank holds one of the biggest portfolio in terms of properties. They are in the league of your big guys like your Old Mutual, etc. But this income has not really been, there hasn't been as much over the past recent years. Why? Because we are looking at an environment where yields are quite low in terms of property yields, averaging market average of about 7% thereabouts. Look at South Africa, the comparatives are quite on the high side, upwards of 12. So there has been low yields. You could also talk of voids. Whenever an economy is under stress, there is a low or a reduced ability to retain tenants. That is, if your portfolio has got housing properties, or even any kind of tenants within your property. But then generally, what the environment in Zimbabwe has caused is that those that are seeking mortgage, or those who got their houses through mortgages, almost paid back those mortgages at close to nothing. Why? Because of this is because of the change in the laws of the land, when the economy de-dollarized and then, of course, re-dollarizing later. What happened then was that uh, the the companies that were offering that service lost money, and therefore there was no value proposition, as it were, given that you would extend your mortgage, you would have built your house in US dollars, and then somebody starts paying back that money in Zim dollars at 1:1. So this meant losses to property businesses. And CBZ also faced a challenge within that. With respect to the Radisson Blue Hotel that was touted then, I think this has been shelved, and we haven't had any new details since at least 2 years back with regards to that project. But I think also this speaks to a whole lot of changes around the Zimbabwe economy, the volatility, and also even the pandemic itself. I think it changed a whole lot when you look at the hotel business across the world. You could talk of the numbers by Airbnb. You could see that they struggled during the pandemic. All other operators of hotel businesses, you would talk of African Sun and also RTG in Zimbabwe. So you would expect an investor in that space to chill back and study the environment more, and then come back at the right time. So I don't know much, but this is just my speculation around the matter.
Bog standard, I must say. Now let's talk about the issue to do with their digital foray. Can you speak to us in terms of the strength of the digital foray? I know that they introduced CBZ Touch recently. What has been the offtake of that particular initiative? And we have also seen on the local scenes as well as in the region a streamlining of banks in terms of brick and mortar structures to operate digitally. Are we likely to see CBZ follow that particular trend? What's your assessment of the performance of the group in that regard?
Yeah, so digitization or digitalization is the it thing as we speak. Why? Because consumers' way of transacting, way of of doing business has also changed. So you would expect that service providers would also likely change the way that they offer their services to a tech-savvy customer base, and not only tech-savvy, but a necessitation of the environment. The environment has become more averse to, in-person transaction or transacting or deals. So you would expect more of these service providers to look at aspects of digitization to spur their business growth. And so banking services or the financial services has been one of the most impacted area, and there has been maneuvers within that sector to speed up the rate of innovation because of these disruptions and these changes that we are seeing. So CBZ has equally been active. They have been one of the key players to move faster into the digitization space. CBZ Touch is quite old on the market. It's more than 5 years since CBZ Touch was introduced, but quite phenomenally, CBZ Touch is simply a banking app which allows customers and non-customers to transact within that banking app. So it's quite phenomenal in that it taps even into non-bankers, non-customers within their portfolio. And recently they have been, trying to create gateways with, other players so as to allow for payments within Zimbabwe. I think these are quite some notable changes. And if you could also look at, the upgrades in the core banking system, etc. This speaks to a continual move to try to upgrade their system. So I would say they are in the league of the best in terms of their digitization strategy. But I think one key thing there, where I expect a drag, is where a rationalization of brick and mortar would be concerned. This is a bank that's largely reliant on government business. A whole lot of its customers are generally employees of government dotted around the world, the country, and you would expect them to maintain a bit of brick and mortar in those spaces as they try to service these, these dispersed, client base. But I think one of the models that they could use going forward is the agency model, where instead of operating a banking hall, you would rather have, your agent sitting somewhere in a corner at a certain growth point in Torashanga Day, offering, all banking services at one go within that small post. It reduces costs, etc. You know it. So I think the bank will be slow because of the backlash that may come from government. But this is the right thing to do, and they will have to do it if they are to maximize their profitability.
Pretty much a run on the mill. Lastly and very quickly, the group did post a somewhat solid quarter one performance, wherein the revenue increased 23% to 4.935 billion Zimbabwean dollars, over which the customer deposits grew 14%. What can we expect from CBZ Holdings as a group going forward over the next 1 to 2 years? Very quickly.
Okay, so I think the journey that CBZ has started is quite transformative. A change in guard in terms of the, the board, and changes in management, and even changes in strategy. There are quite a number of areas that the bank is now playing, which they were not playing in the past. So you expect them to reap much with respect to capital business. I'm sure that there's now CBZ Capital, which is one of the areas that the current chairman is more passionate about. They're now playing as well significantly in the agro space, and I expect them to be more aggressive on it and on the insurance side as well. So I expect them to, to push more on these fronts, and this would generate real value. And obviously, that's the outlook for me in terms of CBZ.
I realize. Well, thank you, Respect, for the perspectives. Thank you, VS, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and visit our informative website, www.equityaccess.net. Remember to catch us every Tuesday and every Thursday, 7 p.m. Central African time on this very same platform. Ibn Mabunda from Harare. This is Equity Access.